Bring in Maxim Group Senior Consumer Internet Analyst Tom Forte. He has a hold on Apple and a buy on Amazon with a 272 price target. I'm just taking a look at Amazon there. It's 226. Tom, all right, let's start with Amazon. After what we saw from the cloud businesses of Alphabet and Microsoft, what are your expectations for the all-important Amazon Web Services component of Amazon overall?
Yeah, so David, what's interesting about Amazon is that earlier this week, from a headcount standpoint, they announced their largest layoffs in company history. So I think that at the AWS cloud computing level, what's been hurting Amazon relative to Microsoft and Google of late is that it's less directly tied to OpenAI. So they are closely rated to Anthropic like Google, and then they're also, on a relative basis, given their size, growing at a slower rate to their two hyperscaler peers. But hopefully we could see sustained positive momentum out of AWS despite those challenges. And I think that's what's going to be the stock driver potentially over the next 12 months for Amazon.
All right, so what are we going to be sitting here talking about tomorrow in terms of Amazon's up or down based on what, a reacceleration of growth? And what's the number got to be? What's the margin number got to be?
Yeah, so to the extent that the AWS revenue growth meets or exceeds last quarter's revenue growth, I think that could drive shares up in the next, trading session.
Okay. Any specifics you want to share or no?
No specifics.
Okay, no specifics. All right. You want to move on to Apple and tell us your expectations there, why you're not perhaps
so Apple's had a very strong run of late, so now let's see how that translates into sales and earnings. So at the company-specific level, it looks like the iPhone 17 is outperforming expectations, though I would say we already knew that to the extent that management had guided September revenue growth to mid-single-digit to high-single-digit revenue growth. And then at the external level, when you think of geopolitical risk, the fact that President Xi and President Trump are meeting and potentially moving toward a trade deal, a sustainable trade deal, that's hugely beneficial to Apple, given it's still very reliant on China from a logistics and sourcing standpoint.
But that is kind of what I wanted to ask you next, Tom. I mean, do you really feel positive about what we've heard from President Trump and President Xi's meeting? It doesn't really seem like they moved the needle too terribly much in any way that may benefit Apple at this point.
So the benefit to Apple right now, I would say, would be the delay in China holding off, holding back rare earth minerals, which is very important to consumer electronics, including Apple.
For 1 year.
If you look at what they're doing from a logistics standpoint, they're relying on China for assembly for outside the U.S., India for iPhones in the U.S., and Vietnam for other Apple products for consumers in the U.S. But I do think directionally, the fact that there's ongoing dialogue at the highest level, that's good news for Apple.
So even if it sort of just kicks the can down the road a year for rare earths to be renegotiated, that's good enough for you?
Yes. So I would say that would be, again, I think why you've seen the rebound in shares, given the geopolitical risk is easing.